Welcome to the April edition of Tax Updates by PwC Turkey. April was the tax filing season and we were all tied up with annual filings. But as you are watching this video, it's time to say what's been going on when we had our heads down, because the world keeps turning. Well, the first item on our list, we have a constitutional court decision looking at a taxpayer who filed a correction tax return with a reservation to bring the issue to court so that the issue could be discussed at court. But when the case arrived to them, the tax court said, "Our hands are tied. You yourself filed the correction and accepted that there was a misrepresentation on your initial tax return. We cannot even consider your request." Well, the Constitutional Court said, "Tax court, you have to make a distinction here. If the taxpayer files the correction by applying provisions of regret of the tax procedural law, yes, he is declaring he made an error and there is nothing to discuss at court. But this taxpayer filed the correction without using the provisions of regret. Indeed, he believes that his first filing is accurate. He had to file the correction only because the tax office wanted him to file. But he objects to it and he wants the court to hear his side of the story. And if you, the tax court, if you don't give him a chance to explain his position, this will be a breach of rights of the taxpayer. The tax court has to discuss whether the argument he makes is accurate or not. This is a very important and welcome decision as it opens the way to the taxpayers to make objection to the correction returns they had to file involuntarily. The next item is another Constitutional Court decision actually. This one concerns the penalties charged on advance tax payments. So our taxpayer in this court case, he receives penalty both on his quarterly tax and annual tax with respect to the same offense he made. And he goes to court with the argument that there is duplication of penalties, that he shouldn't be punished twice from the same offense. In legal circles, this is known as nebis in idem principle. The Constitutional Court, however, refused his argument. The court said, quarterly tax return is different than annual tax return. 2 acts, 2 penalties. There is no breach of the nebis in idem principle here. It's difficult to agree with this conclusion. The taxes declared and paid by quarterly filings are nothing but advance payments for the annual tax liability. Legally, there is an issue here when the taxpayer receives penalty both on advance tax and then the annual tax. Let's now move on to the special consumption tax communique issued in April in relation to the oils and fuel used in the production of motor vehicles. You may remember that in February, the special consumption tax rate on the purchase of different types of oil used in production of motor vehicles which are exported to foreign markets was set as 0. The 0 rate applies also for the fuel filled in the motor vehicle's tank for the first consumption. The producers, once they export the motor vehicle, they can ask for refunding of the taxes they incurred. And a communique in April explains the procedure that producers need to follow to get their refunds. If you are manufacturing motor vehicles and if you are exporting them, this is something to check out. If we jump out of Turkey, there are interesting developments related to the digital arena. First one, OECD recently published its report on the role of digital platforms for collecting VAT on online sales. The main challenge VAT system faces in connection with these cross-border supplies relates to the importation of low-value goods. Many countries currently apply an exemption scheme to these transactions. However, non-compliance rates have reached to approximately 65% with regard to the goods purchased online by EU customers and transported from non-EU countries via post. The OECD in its report suggests a regime whereby online platforms are responsible for assessing, collecting and remitting VAT in connection with online sales carried out through the platform. It's an interesting development and could shed a light to the practice in Turkey as well. Second development related to digital comes from France. In April, the National Assembly accepted the bill introducing a 3% digital service tax in France. And also in Malaysia, in April, a draft bill bringing tax on digital services was presented to Parliament. And the last news comes from Germany. In April, the Ministry of Finance in Germany brought clarification to the treatment of cross-border payments for online advertising. You will remember that this is an issue we had discussed also for Turkey in our videos. But the Germans went the other way in their clarification. In their guidance, the German Ministry of Finance stated that payments to non-resident suppliers for placement of online advertising were not subject to any withholding tax under the current rules. Well, we have come to the end of our time. Thank you for tuning in. We look forward to next month.